Hi everyone. Time to do a bit of an update on Jobkeeper 2.0. So the announcement of Jobkeeper 2.0 came out on the 21st of July. It was extension of Jobkeeper 1, which would take us into the October to December quarter with a following on from January to March. At the time, we were thinking, let's do a webinar, explain it all to our clients, and get that information out there on how it works. And we quickly realised that we didn't actually have much information to tell you. On the 7th of August, the the government came out and changed some of the tests that they'd announced on the very first Jobkeeper 2.0. So the initial Jobkeeper 2.0 required you to have the 30%, 50%, 15%, depending on what category you are. So just to go over those categories, if your business turnover is less than $1 billion, which I'm guessing is most of you, your decline in turnover to qualify for Jobkeeper 1 or Jobkeeper 2 was 30%. If you've got more than $1 billion worth of turnover, it's 50%. And if you're a charity or a registered not-for-profit agency, then it's 15%. So the test told us originally that we had to both show that required decline in turnover was both from the April to June BAS and also in the July to September BAS. Now this seemed to be quite strategic in my mind from the ATO, because we do know that people can sort of manipulate their figures a little bit if they really want to, but given that this announcement came out after the April to June BAS had already been lodged or was already being processing time frame, it was very difficult to go back and change those figures. Shortly after that announcement was made, Victoria went into full lockdown again, and it suddenly became quite apparent that people who were impacted by that lockdown were not going to be able to necessarily qualify for Jobkeeper 2, because they may have had a return in their turnover between that April and June quarter, but suffering severely again from the July to September quarter. So when the new announcement came out, we discovered that Jobkeeper 2 would only be based on the July to September quarter. Now, the tests are slightly different to what we had in the original Jobkeeper. So with the original Jobkeeper, we were looking at any month between March and basically September, where we would, or August, because there's no point going into September, where we had suffered that 30% decline. We also had the opportunity to look at in April, that we could estimate that between April and June we would suffer that 30% decline, and that was obviously a prediction, and the ATO were happy that if we predicted this on a basis that seemed logical and reasonable, that they would accept our prediction, even if the facts didn't necessarily stack up that we had that 30% decline. Now, the Jobkeeper 2 is based on fact. It is based on what happened in July to September, and that is really all that it's based on. So the test that we've been given, which is the basic test, is that we compare our GST turnover, which is our sales less our GST, from July to September this year to July to September last year. Now, for most of us, that should be fairly easy to do. We just take a look at what we put on our business activity statement last year. We have a look at what we're going to be putting on our business activity statement this year and doing that comparison. If we continue to suffer that 30% turnover, we qualify for Jobkeeper 2. If we're a charity, if it's 15%, we continue to qualify for Jobkeeper 2. Now, in the initial test, we were told that we could choose to do our calculation on a cash or an accrual basis, and that still continues. However, the ATO have recommended that you do it on whatever you lodge your business activity statement on. If that doesn't pass the test and you can pass on a different base, on the other basis, so whatever it is that you don't lodge your BAS on, they may come back and ask you. So clearly the ATO are trying to establish some rules around how they can easily identify who might be milking this system a little bit and who really shouldn't qualify. So the important things to remember is yesterday, the 27th of September, was the very last day for Jobkeeper 1. That was the end of the final fortnight. That means what we need to do is we need to make sure that for that last fortnight between the 14th of September and the 27th of September, you've paid the required minimum of $1,500 to any of your employees who are getting Jobkeeper. And that's it. It's finished. Jobkeeper 1 is completely done. We will then go back and do our declaration in October, so in the next couple of days between the 1st of October and the 14th of October, to tell the ATO how much our turnover was for September. They will probably ask us, I'm assuming that what we predict to have happen in October. We'll get our payment for those last 2 fortnights, and that's it, done. But what we need to start thinking about now is, are we going to qualify for Jobkeeper 2? Now, realistically, the intention is that most of the businesses who have recovered or even partially recovered probably won't get Jobkeeper 2. Jobkeeper 2 is really designed for those industries that are severely impacted. And, you know, if you think about Jobkeeper 1, when you were looking into that, what was happening in the economy, we were all in shutdown. We were not really going anywhere, buying anything. Everyone kind of just shut down for that, particularly that April-May period. After that, things started to open up again in most economies in Australia. We started opening up our hotels, we started opening up our restaurants, we started going back to the gym. A lot of things returned back to some sort of normal. Now, those places probably don't all continue to have a 30% decline in turnover. It doesn't mean that they won't, but some of them won't. It's definitely aimed at the Victorian market, who are still in lockdown, and those industries that are really truly severely impacted by this, including the entertainment industry, the travel industry, and some of those other hospitality venues that just really can't open to the capacity that they used to be able to open to and make the money that they used to be able to open to. So let's think about if we are going to qualify. So first of all, do that basic test and determine if you are. If you are able to qualify, what you need to do is first of all go back and have a look at all the people you have on Jobkeeper and work out what tier they fit into, because the Jobkeeper 2 payment is going to change. It's not going to be a flat $1,500 for each person. It will be based on how many hours that person would have worked either in February or July. So the rules are that we go back to the 4-week period prior to the 1st of March or prior to the 1st of July, whichever seems the most relevant and whichever gives you the better figure. And you have a look at that employee or business or eligible business participant. So a business participant, just to refresh your memory, is a sole trader. It is a partner in a partnership. It is someone who is a beneficiary of a trust who doesn't get paid a wage, or it may be a company director who doesn't get paid a wage but is still participating in the business and was probably drawing their money via directors' wages or directors' fees. Now, each business can only have one eligible business participant, so you would be aware if you were on that situation. You would know if you have a business participant as opposed to employees. The rules are the same whether you're a business participant or an employee. We need to go back to that period 4 weeks prior to the 1st of March. So what did they work in February? And look at the average hours they worked in that 4 weeks. If they worked more than 20 hours, then they're on tier 1. If they worked less than 20 hours, they're on tier 2. If the 1st of March period doesn't seem relevant, or you want to have a look at how those figures fit for the period 4-week period prior to the 1st of July, you can do that. And again, it's exactly the same test. Whichever one of those tests provides the higher number of hours is the one that you take if you are going to do the same test for both periods of time. If that person is on tier 1, they will get a payment of $1,200 per fortnight, so it's reduced from the $1,500 you're currently getting. If they're on tier 2, they'll get $750 per fortnight, so that's obviously a fairly significant reduction. you would obviously need to go back and tell your employees. I think it's really important, first of all, you go back and explain to your employees that JobKeeper 1 has finished. We are retesting for JobKeeper 2. Yes, it does apply to us, or no, it doesn't. And if it does apply, that their payment will be Tier 1 or Tier 2. So please make sure you're telling this to your staff. You do not need to get your staff to fill in that JobKeeper declaration again, so we can continue with the one that we already had. And the testing criteria hasn't changed with regard to our staff. It's still based on, it was originally based on whether they were an employee on the 1st of March. That did change to being whether they were an employee on the 1st of July. So that means that they're a permanent employee on the 1st of July, or a long-term casual with more than 1 year worth of work on the 1st of July. If they fit that criteria and they're on the right, they're either Australian citizens or on permanent residency, or not on some tourist visa that disqualifies them. They're also not getting parenting payment. So all the same criteria apply, then they can continue on to JobKeeper 2. Right, what do we need to do as employees if we do know that we are onto that? We need to go into our single touch payroll, and there will be the ability to advise the ATO that you are going to be doing JobKeeper 2 and what tier your employees will be on. So that'll be important. We also need to make a declaration to the ATO that you have passed the test. At this stage, I haven't seen what that declaration is looking like, but we believe that we have until the end of October to make that declaration. As with JobKeeper 1, because there's a little bit of uncertainty right now, you haven't actually got to the end of September, so you may not be really aware of whether your figures are going to pass or not. We have until the 31st of October to have done the declaration, to have made sure we've paid our staff the minimum amount of money, and just to basically have it all up and running. So we've got that full month to do that. I would suggest you probably want to be onto it before the 31st of October. Okay, now what if your business is, okay, a couple of other things I just want to explain to you. With your turnover, that does not include any JobKeeper payments that you have received between July and September. A few people have run their reports and looked at it and gone, I don't pass, but if they take their JobKeeper or cash flow boost payments that they may have included as income in their accounts, they possibly will pass. So that's one important thing that you need to remember. And that's probably everything I'm thinking of that I need to tell you about JobKeeper 2 at this point. The thing that came out the other day that is of note is that JobKeeper 2, like JobKeeper 1, had a bunch of alternative tests, and we've been waiting with bated breath to find out what those alternative tests are. And they've finally come out, and I spent a bit of time over the weekend reading them. So I'm going to go through those now. It is quite technical and a little bit boring at times, but let's see how we go with it. All right, so the first test is if you're a new business. Now, obviously, if you're a new business and you started somewhere between the 1st of July and the 1st of March, it's very difficult for you to compare your July to September figures if you didn't have July to September figures last year. So if that's the case, you need to find some other way of comparing it. So a couple of things we can do, and that there's two different ways that we can look at that. So let's assume we started our business in September, on the 1st of September. What if we were to compare our 1st of July to 1st of September figures from last year? They're going to look very different to the 1st of July to 1st of September figures this year, because we only had 1 month of trading last year, and we're not going to pass that test. So what we're going to do is we're going to look at the number of months that we've had between September, so from the 1st of September to the 1st of March. So we're going to work out our average turnover per month on those months that have been open prior to the 1st of March, when our trading started to be impacted by COVID. We'll work out that average. We will times that figure by 3. That will be our comparative figure. So we will compare what we turned over from July to September this year with the average figure that we had for the period of time that we've been open between opening and the 1st of March That's where it comes from. What if we opened somewhere in February? We obviously don't have a full month of trading. So if that's the case, what we do is we look at what our turnover was for that period in February. We divide it by the number of days that we were actually open. So if we opened on the 20th of February, we divide it by 9 and then we times it by 29. So we come up with what we could consider to be a monthly figure. We would then times that figure by 3 and that would be our comparative. The other alternative that we can use if we do not pass that, if we weren't open prior to the 1st of July last year, is we can actually look at the 3-month GST turnover figure prior to the 1st of March last year. So that means we'd be looking at December, January and February, working out what that turnover figure is and using that as our comparison instead. It doesn't matter which of those tests you work, either of them will work for you. There was one other thing I did want to say about GST turnover, and we keep referring to it as GST turnover, but even if you're not registered for GST, you're still eligible to do this. So GST turnover is the concept that we use for those who are lodging their BASs to work out their turnover. If you're not registered for GST, you can still continue to use that test. It's just that you don't have GST applicable. Okay, the next test we have is the test for the business, if your business acquired or disposed of part of its business during that financial year, or during that period. It's not even the financial year, it's the period. So between the 1st of July and the 1st of March, if your business bought or sold another part of its business, clearly the turnover is going to be slightly different. Now, that being the case, it always says when this happens, did it affect your GST turnover? So if you did buy or sell a part of your business that had no impact, then this test is really not relevant. But if it does impact the way that you trade going forward, then it is something that you need to have a look at. So if that is the case, what you need to do is you need to look at the turnover the month immediately following the acquisition or the disposal of the asset, and we use that as our comparative figure. We times that by 3. So let's assume that in December you sold part of your business, which means that your turnover is going to be different, or you bought a new business. Then we go and look at our January figures when things are into what we now call our new normal. We times that by 3 and we use that as our comparison between July and September. The same applies if you have a restructure, which is the third alternative test. Now, a restructure of a business, what does that mean? I guess it's up to you to determine if you think you've had a restructure that has impacted your GST turnover. If that is the case, it is exactly the same as the test I just explained above or before. So the GST that you would have, the GST turnover that you would have had the month following the restructure is what we're going to use. We're going to times that by 3 and we're going to use that as our comparative figure. The next one is the one that we use the most in the first Jobkeeper, which is when you've had what's considered a substantial increase in your GST turnover due to the fact that your business has been expanding. Now, this test is probably not going to be so relevant now. It's probably more relevant if you've already used it in the past. So what I'm talking about is, let's assume that in let's assume that we've just had a really big growth in 2019. We've had a huge year and things have gone, from July 2019, we just had a really big year. Everything was growing really, really rapidly. And when we got to January, March, we were doing much better than we were earlier on in the 2019 year. So suddenly, even though we've had a decline in our turnover, it doesn't look like we have by comparison to the previous year because we had done so much better in that first part of 2020. So to be able to do that is quite complicated, and I probably suggest that you get a professional to help you with that. But what you want to demonstrate is, first of all, that in the 12 months prior to either the 1st of March or what's called the test period, which is July to September, that you can demonstrate that your growth was more than 50% or more than 25% in the 6 months prior to those dates, or more than 12.5% in the 3 months prior to those dates. Now, the 12.5% is probably going to be really bit difficult to establish because if we're looking at a 12.5% growth in the 3 months prior to July to September, we're looking at COVID time. So it's kind of going to be probably difficult to establish that that's necessarily the case. But a lot of people have used that test off the March date and they have passed on that, and they probably will continue to use that test in this new regime. So if that is the case, what we look at is we look at comparing, if we pass that test to say that yes, we've had that growth, so that's the first element, we have to pass that test. Then we have to look at what our new comparative figure is. So our comparative figure is either going to be the 3 months prior to the applicable turnover test, which would mean the 3 months of April to June, or we're going to compare it to the 3 months prior to the 1st of March, which is December, January, February. I imagine that most people who pass this test are going to use that 3 months prior to the 1st of March as their growth period that they're going to compare July and September to, because I can't imagine too many businesses have done exceptionally well between April and June to then be able to continue to qualify for Jobkeeper. Complicated, I know, but most accountants have got their heads around this, and they've got spreadsheets that they can use to establish if you're actually going to pass that test or not. If your business was affected by a natural disaster, and that includes the bushfires, obviously we had some massive bushfires, or if you were in a drought declared area, there are special circumstances and tests that apply to you. So first of all, if you were affected by one of those things and you had a downturn, if we're using some of these calculations and we're looking at, say, periods of November or December when your business was severely impacted by bushfires, you do have the ability to exclude those months out of the test. And again, I think take a bit of time to read the legislation and try and work out how that might impact you. But also if you were looking at, particularly drought affected areas, so if you're in a declared area and it had affected your turnover and you're trying to now compare September this year to September last year when you were in a drought period, it may not be relevant. So what you can then do is actually look at the same time in the year prior to the drought declaration. That does not necessarily mean it's going to be the same time 2 years ago. It could be 3 years ago, whenever that drought declaration was. So you do have the ability to compare to another period that is more relevant because the circumstances were different and more normal at that point in time. Now, if businesses have irregular turnover, and this is a really confusing one, and again, probably need the help of a professional on this, but if a business has a regular turnover, what they're really looking for is, let's say that you just had one really significant quarter, something happened in your industry, in your business, that meant that your turnover was really out of its normal in that period. To be able to test if you're eligible for that, what you need to be able to do is find a 3-month consecutive period in the past year where your GST turnover was less than 50% of your highest 3 months in that year. So let's assume we have our normal GST turnover is, say, 300,000. So we've got 300,000 each quarter, and then for some reason in one of the quarters in the year, potentially maybe the December quarter last year, something unusual happened and you suddenly had a turnover of 800,000 in that quarter. Now that turnover can't be because of seasonality. So it can't be because you run a business in the snow that people don't come to your business in September, but in January, but in that month, those few months of ski season, that your business is really high. So it can't be due to seasonality. It has to be due to some other factor. If you pass that test, then your comparative period will be the average of the relevant 12 months. So you would look at the 12-month period that you're looking at where you've got your low and your high. You would then look at the average for those 12 months and you'd times that by 3, and that's your comparative. And then the very last test is if you are a sole trader or a small partnership which has no employees, and you happen to have been sick or on holidays or injured and you couldn't work during the relevant testing period, and it makes your turnover look really, really strange, then we do have the ability to look at the GST turnover on the month immediately before you got sick or injured or on leave and times that by 3 as our comparison. Now, just be aware, even if you are the only person working in your business but you're trading through a company, this test will not apply to you. It is literally just for sole traders and small partnerships that do not have any employees. So I know that sounds extremely complicated. I totally appreciate that your head's spinning right now. My suggestion is, first of all, do you pass the normal test? Yes or no? If you don't, do we have any of those factors that may have impacted your industry, your business? So have you had a change in restructuring? Have you had sold or bought part of your business? Have you felt like you've had a significant growth period sometime during last year that may mean that your turnover this year is naturally going to be higher even though it's been impacted by COVID? Is there some irregularity that is causing you not to be able to compare this year to last year on a basis that makes sense? If that's the case, probably seek the help of a professional. We're here to help you. I know this has been a really long-winded discussion, and I probably have still managed to forget to tell you something really important, but you have a month to sit down and look at this and get it right. I do believe the ATO will be a lot more vigilant on making sure that people who do get Jobkeeper 2.0 genuinely should be getting it. So do the right thing. Go through the numbers. If you are able to get it, but don't just get it because it's available. Once we've gone through once you've tested and you have got it for the Jobkeeper 2.0, you will get the payment for October, November, December. You do not have to requalify during that period at all. It's just qualify now. You'll get those 3 months payment. The next testing period will be at the end of December, so in January, to continue to get it from January to the 28th of March. Once we've got through that end of Jobkeeper, hopefully everything's back to normal and our lives are resembling some sort of normality and our business lives are resembling some sort of normality. The rate will reduce again in that January to March period. Have a great day, everyone, and good luck with your Jobkeeper.